You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
Welcome back to Options Insider Radio, the interview program here on the old network where we welcome on guests from throughout the world of options and derivatives and proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the aforementioned radio network where we sound a little bit different. If you hear a little bit of crashing and banging in the background, it's because we're not beaming to you from our studio in Chicago. Nope, we're coming at you from the Inside ETFs event here in sunny and scenic, easy for me to say, sunny and scenic Fort Lauderdale. And I'm joined now by a newcomer to the program and indeed to the network. He is Jonathan Molchan, the Director and Portfolio Manager over there at Horizons ETFs. Jonathan, welcome to the program.
Thank you for having me, Mark.
All right, and Jonathan, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a little bit of an overview of your background in the options and derivative space and how you found your way over there to Horizons.
Sure. So Horizons right now is a member of a $20 billion global ETF platform, which is housed underneath Murray Assets Global. That's a $350 billion firm headquartered out of Seoul, South Korea. Our focus here is to bring innovative products to market that incorporate options to benefit retail investors who may otherwise not be educated or familiar enough to feel comfortable to trade options on their own. My background prior to joining this, I worked in the hedge fund industry at SAC and Millennium, where I traded equities, options, and futures for roughly 10 years. We then started our firm and are now 1 year into being a member of the Murray umbrella and really rolling out some interesting products for retail investors on the ETF side that are all options-based.
Now, I'm glad to hear you say that, and I'm glad to run into you here at this conference, because for a while there I was starting to despair that there weren't many people interested in options here in the ETF space. But you mentioned you have a lot of interesting funds, a lot of interesting products that incorporate options that may interest our audience. Why don't you run down some of those for them?
So our flagship product, the ticker symbol is QYLD. It is a at-the-money monthly buy right on the NASDAQ 100. Very simple concept. We do a full replication of the underlying stock holdings. And then the CBOE BXN index is the option component. Every third Friday, which is options expiration, they tell us the strike. We go out and we write index call options on the NDX. Benefits the investor in a few ways. One, it takes the trading out of their hands. It's more cost efficient, and index options are more tax advantaged than single stock options.
So you're essentially linking and listing it to the CBOE buy right index. Is that the at the money? I know they have a variety of different flavors. Is that the at the money one?
That's the at the money, which is the BXN. The ETF now tracks the BXNT. What we did is we started closing the option from 3:30 to 4 o'clock Eastern time on the close prior to option expiration to get away from the special open quotation.
Special quotation has we've done some interesting back when they were first doing BXM and then the put right. We had a lot of people writing in saying, why are the performances, this is of course on the S&P, why are these performances so drastically different? And we think they're effectively the same thing, at the money call, at the money put. And we started digging. We actually had the creator of the put right on to talk about that. And you're right, it was the special quotation, the open rotation that threw the whole thing out of alignment, I guess you can say. So that's an interesting development. I think that makes a lot of sense once you start looking at the mechanics of the indices. What else you guys have cooking up over there?
We also licensed the BXY index, which is the S&P 500, 2% out of the money, monthly buy right. That is one of our legacy products that has always been part of Murray. The QYLD is a more innovative new product that we like. And to round out the U.S. suite, in about a month or so, we're launching the BXRD index, which is the Russell 2000 30 Delta. So we're going to be writing index calls on the RTY, roughly 2% out of the money every month.
Interesting. So Russell, of course, obviously small cap should be inherently more volatile, so that should be attractive from a premium writing perspective. Also, you're basing it on a 30 Delta, which I think is kind of is interesting. So you're getting a little bit into the options weeds there, which I like. So what is, obviously the new fund hasn't been launched yet, but what has the uptake been on the other two funds you've been talking about?
The other two funds have gained tremendous traction this year. We more than doubled our assets, and the conversations even at this conference around the Russell product, which is going to be RUSY, is the tax advantage not just on the options but on the single stocks with the tax reform that's going on. The other nice thing that people seem to like is that you have an additional upside on every month to continue to participate in the equity growth and performance.
You're getting a lot of people at a conference like this pushing back and saying, well, what do I need to write the call for? The market's up, 15 to 20% a year here. Am I going to clip my performance? Do you find people are a little reticent because of that, or are they more maybe perhaps excited by the idea of the income component?
You're 100% right. The first thing they come up with is, why are you going to cap my upside in this tremendous bull market? But then when you show them the income component, where you could have the same exposure to the underlying equities in the NASDAQ 100 with an 8% annual dividend and 2/3 of the volatility. Last year, QYLD was up 18% total return with an 8% div. So you're not going to go to cash if you're concerned. You're not going to fixed income. And if you feel like maybe you want to take, this is not a core product. This is 10% of your portfolio, 20%. That's there to add the income, give you a better risk-adjusted return on a portfolio level, but still be there to participate.
Yeah, you're right. It gives them an equity exposure with a fixed income-like return, which I think is probably attractive for a lot of people out there. You mentioned a lot of the covered call products, the NASDAQ Russell product coming out down the road. Anything else, any other hints, any other teases you can leave our audience with? Maybe some put rights, maybe some, who knows, something funky, covered combo. What else do you guys have cooking up your sleeve over there in Horizon's ETF land? Maybe expanding that to commodities, something else like that?
It's not on the docket yet, but the next version that incorporates options is a completely different spin. We did a partnership with a $4.5 billion firm in Boston, wholly owned subsidiary of Pacific Life. They have a multi-factor model on the Russell 1000. Great performance, great yield, 3.5% just on the equity sleeve. What we're going to do now is sell an out-of-the-money call to finance, take some of that premium and buy puts to lower the vol, some downside protection in years of, say, a correction in 2015 where you could capitalize on the put, and then take some of the other premium, and that goes out to enhance the dividend even more so.
Yeah, interesting. So I've been asking everyone here at this conference, I'd be curious to get your thoughts on this as well. Obviously last year, massive inflows into ETFs, a lot of that into the passive space. People kind of want to just ride the index up, and they probably just going to ride it back down. I'm curious what are your viewpoints on this, and for you guys who obviously you can offer a package thing which is for the end user somewhat passive but still active from your perspective. Has that been a headwind for you guys? Are people saying, I don't want to touch anything that's active, or has that been more of a maybe these valuation levels here, are people starting to reconsider what you're doing? What has the feedback been like?
The feedback has really been that no one was ever aware that they could do this.
Judging, I would have thought that was crazy until I actually walked the conference hall a little bit myself, and now I think I understand where you're coming from.
I think people are really impressed once they understand that they can still own stocks, get 4 times the dividend for owning the stocks with less volatility. And when you put it that way, people like the idea.
What sort of wizard are you, Jonathan, that you're coming here and giving them this voodoo, this black magic that they never knew existed before? But yeah, it sounds like you guys have hit on a nerve, and I'm certainly excited to see an options-oriented ETF provider gaining a little bit of traction here in this sea of what are effectively a lot of Me Too, smart beta, 1.25 leverage, 2.5 leverage, whatever long equity. It's nice to see something a little bit different being factored into the mix, pun intended. So, Jonathan, people are interested in what we're talking about. They want to learn more. Where should they go? What should they do?
They can go to horizonsetfs.com, and they can check out our learning library. They can learn more about our covered call products. All of the information is on there. And we also do monthly webinars that we could feature as well, to continue educating people so that they know that they have these options in ETFs.
Well, Jonathan, I'm very glad to meet you. I'm glad to learn about your products. I'm looking forward to seeing how all of these covered call type products unfold in the marketplace in the coming months.
Appreciate it. Thank you.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.